Okay, would you like to be able to catch breakouts within the first 15 to 30 minutes of the trading day before most other traders get in? You'll learn the simple, high odds strategy of how to do just that in this video. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City since 2005, and now Miami as well, and proud to have developed numerous 7 and even 8-figure per year traders. Watch, take notes, and learn from the team at our prop firm so you can grow your trading account.
Welcome back to another Bar by Bar. Today we're diving into one of the most effective and beginner-friendly trading strategies, the opening range break, or ORB, or ORB for short. If you've ever struggled to find a structured trade at the open, this is for you. So what exactly is an ORB or ORB? The opening range break is the high and low that forms in the first 15 or 30 minutes of trading. Big players establish this range as they build positions, creating a level of balance. When the stock breaks out of this range with strong volume, that's where the momentum can kick in and a trend could develop and provide a high probability trade. This is an excellent strategy for beginners because it offers clear rules for entry, stop placement, and targets, removing a lot of the guesswork from trading. In this video, I'll go bar by bar through real examples from the past few weeks, showing you how to identify a strong opening range, the volume confirmation that separates real breakouts from fakeouts, where to enter, set stops, and take profits, and small but critical nuances that most new and developing traders miss, things that can make a big difference in execution, confidence, and overall trade success. By the end of this, you'll have a simple yet powerful approach to trading opening range breaks effectively. So let's jump into the charts and break it down. The first one we're going to jump into is one of my biggest trades of the month in MSTR. Real simple trade. First, we're going to have to take a look at Bitcoin to sort of set the stage here. So you see over the past week or two, Bitcoin has done a really good job holding over this $95,000 level. On the 24th, we closed below that 95K support. And on the day of the trade, Bitcoin was gapping down a bit below key higher time frame support levels, setting up a higher time frame breakdown. One product that I was looking at to express this trade was MSTR. Just zooming in a little bit, MSTR topped out in November and has been range bound with a few support levels at 310, 300, that whole number psychological level, and the recent low, which was 285.01. And you could see that the day it closed below 300, it also broke through the 100 SMA for the first time in quite a while. The higher time frame in MSTR and Bitcoin sets the stage for this higher time frame breakdown. And now we just need to look for a setup intraday to express this trade. Off the open, you see we're gapping up a little bit over 300. Right off the open, we break through 300. 300 and VWAP and the 9 EMA begin to act as resistance. I don't like to take opening range breaks before the full opening range has formed. I found that my win rate is quite low on these if I try to jump the gun before 9:45, before I let that opening range fully develop. So after 9:45, we get the breakdown, and then we get a really clean trend and solid momentum. You can see that momentum that comes in, and you can see that we start to extend away from the 9 EMA. So one take profit method, you could target 1 ATR from high of day, which brings us to around 282. However, as we traded into that recent low and started to slow down, that RL that you see I have here at 285, which was the recent low from this consolidation on the higher time frame, I'm taking profits into momentum as the momentum starts to slow down in this area. Then we break down, momentum continues to the downside, and I'm taking additional profits at 282, which is 1 ATR from high of day. And then you notice that we capitulate at 10:06 a.m. That's a good capitulation volume bar, the highest volume bar of the day by far at 10:06. And we get a break of the prior 2-minute bar high. And the combination of that trend break and that capitulation volume that comes in is a clear end to the trade, and we're taking profits there. The next opening range break trade that I want to dive into is OKLO from February 6th. So let's set the stage by looking at the higher time frame. OKLO has been showing clear relative strength to the market, so we could take a look at QQQ around this time in comparison. So you could see Qs are range bound, sort of in a more choppy market environment, while OKLO has no problem trending higher, putting in new highs. So we have a stock that is relatively strong to the upside in comparison to the overall market. In addition, this is a hot sector with some buzz behind it as interest grows in nuclear energy as a solution for AI-driven power demands. There is also backing from Sam Altman, who's the CEO of OpenAI. In addition, short interest was over 20%, which tells us that OKLO is susceptible to squeezes. On the higher time frame, you can see OKLO tries to break out here, closes at new recent highs, and the next day we put in an inside bar. So just a few levels that stuck out to me that I had marked off for this trade was this recent after hours high at 48.58, 48, and the prior day's high, which is right around, 48. What's actually interesting about this trade was that I was not actively watching it. I just had alerts set. I knew that I was only going to be interested in this trade if we broke through 48. So because of that, I just set alerts a little bit below 48. So in the morning, my alert went off as we traded into 48, and there was an immediate failure lower. So I set another alert near the highs, and I moved on. I got my second alert, which resulted in an immediate failure. So I set the alert again and moved on. Then at 10:40, my alert goes off again, just a little bit below 48. And what I notice is this huge volume coming into the upside, setting up a perfect opening range break opportunity. So as we broke through highs, I bought a position. As we broke through that recent after hours high, I added to my position. And with a volume bar like this, through recent highs, through recent after hours highs, and that 48 level, and that opening range high, this made for a really excellent opening range break to the upside. And when we have a very clear breakout bar like this, you can really simply put your stop just a few cents below that breakout bar. So we have confluence with an intraday high, higher time frame, resistance area. We have the recent after hours high. So we have a lot of key levels here, which really just add some confidence to the trade. I love to see that confluence with the opening range breaks. So how did I manage this trade? Well, it worked out really quick and it worked way better than I expected. We get a push up into 50. So on the 2 minute, you can see, what's really interesting about this, if we zoom in, we have the failure from resistance, and then we start to curl lower and we break to the downside. And that ends up being a short trap, and we start to curl higher, back over VWAP after a failed breakdown through the lows, which results in that squeeze. And again, I'm adding through highs, and then I'm taking my final add above that recent after hours high at 48.58, and the stop simply goes a few cents below that breakout bar. We get a really fast move into 50. 50 psychological level, clear momentum. So I'm going to implement a combination of take profit methods. I'm scaling out into 50 as we trade up into 52. That is one ATR from low of day, where I took profits on the remainder of my position. For this trade, I did swing a piece, which did not follow through, and I ended up getting stopped out on that. But overall, I thought that this was an amazing opening range break trade, and all I had to do was just set alerts at the key level that I wanted to know about. So next up, we'll take a look at BBAI from February 6th. Now, full disclosure, I did not trade this one, but one of the traders that I've been working with did spot this, and I thought it was an excellent trade. So let's take a look at it and review. On the higher time frame, You can see volume coming into BBAI. You can see this resistance level at $4.80. You can see it tests that. Looks like it's going to break out and fails. So we have a recent high of $5.20. In the pre-market, there was news in BBAI. The news was that they secured a significant contract with the US Department of Defense. The deal involved using AI to enhance geopolitical risk analysis. RVOL was extremely high, and short interest, similar to OKLO, was above 20% for this stock, which tells us it's susceptible to a squeeze. And you can see in the pre-market, when that news comes out, we break over that recent high at $5.20. And you could bet that shorts are starting to get nervous here with the news and the higher time frame breakout. Now we need to look for a setup intraday to participate in this opportunity. So we have an intraday high, $5.85. We have a very tight opening range that is, you can see it clearly holding over VWAP. Every time it gets below VWAP, buyers step in, and you can see that with these wicks. Just wicks into VWAP and rebids, wicks into VWAP and rebids and rebids. And then it starts to hold up near the top of the opening range. And it's completely fine that if you take this opening range break to the upside and it stuffs and it fails and you get stopped out, that's completely fine. But more often than not, we need to give an idea more than one attempt. So you can see after that failure from new highs, we failed to break down and we continue to hold up in just this 9 EMA access support, which is really nice. And then we get the opening range break to the upside. A few ways that we could manage this trade. One, you would want to scale out of some into momentum as that momentum starts to slow. So that could be around $6.20. You can see that fail for 2 minutes there. And then we push up to $6.30, which is right around 1 ATR from low of day. So I think taking 1/3 or a quarter of your position off there is completely fair. And then we could look for a 2 ATR move, given that RVOL was extreme here. So you can see at the end of the day, BBAI traded 609% of its 30-day average volume. RVOL was extremely high. And what I like to say, when RVOL is over 5, we need to have an imagination. The stock could move 2, 3, 4, even 5 ATRs when RVOL stays elevated like that. And we know that the stock has over 20% short interest. You could use the 9 or 21 EMA to define your trend. We could see that the 9 doesn't really work out too well. You can see like we're kind of closing below it. We pull into it a couple times. And then what's really interesting is we get the first pull into the 21 EMA and it holds. So you could just simply say, as long as we're holding above the 21 EMA, I'm going to stay in this trade. We get some momentum and an extension above $7. Nice round whole number. I would be taking additional profits there. We get another pullback to the 21 EMA on the 2-minute. And just to say real quick, I like to use the 9 and 21 on the 2-minute the best. We hold the 21. We push up, hold the 21 again, and we start to stall out around $7.40. And interestingly enough, that is now 2 ATRs from low of day, so a good sign to take additional profits. And then, what's nice about this is you get a clear trend break on volume as the stock fails from 750, and you get a cross of the 9 and 21 EMA for the first time all morning since that news came out in the pre-market. And you can see volume comes in there on the trend break. So if you're not out of this trade by now, that is your clear signal to take profits there. Now we're gonna jump into RGTI, which is a quantum computing stock. After hours on January 7th, Jensen Huang, who is the CEO in NVIDIA, came out and said that he thinks quantum computing is a great idea, but he thinks it's about 30 years out, which caused the backside in this stock and this steep down move, which gave back more than half of this recent rally. And traders were looking for a short. And essentially what we end up having here is a bit of a dead cat bounce. Similar to the MSTR and Bitcoin opening range break is that we have alignment with a daily chart breakdown and confirmation through the opening range break intraday. So you could see that RGTI, after it tops out here a little bit on the daily, it develops a range between 14 and 12. You could see that clear buyer there at 12 on the daily in this consolidation, holds, 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 and continue to holds. And then we get a false breakout through that 14 resistance area, and it starts to curl down. So full disclosure, this is one of the trades that I did not take, but I saw a trader on the desk did really well with this trade, and it just makes a ton of sense to me. I love this trade. So let's dive in and reverse engineer it together. And also, similar to OKLO, this is just one that you could set alerts for. And I believe this trader just got the alert for this trade as it came back into 12. And what's really nice is you have that confluence with the higher time frame support and the opening range low right at $12. So you see this nice tight opening range develops. We have the low at 12.04. The stock holds 12.04 and it tries to bounce and get back above VWAP and it can't. And it tries to push above that 21 EMA and it can't, and it continues to fail before we start consolidating near the bottom of the opening range. My favorite check in favor for these opening range breaks is when you see one of the highest volume bars of the day through that opening range, and we have extremely high volume, highest volume bar of the day through the opening range low and through that higher time frame support at $12. And whenever you get these high volume breaks, it just makes for a really simple entry, and your stop loss goes just a few cents above the high of the breakdown bar, or if it's a long, a few cents below the breakout bar. So we get the breakdown, it's consolidating, it's holding below the 9 EMA. We pop up into the 21 EMA. You can see volume is really light on that move, like the lightest volume that we've had so far all morning. And then we get another breakthrough lows on high volume, which makes for a really great add opportunity. You can see we're trending lower. We start to extend away from that 9 EMA. In that case, I would start to partial out of 25% of the position, hoping for a bigger move. You see the stock really starts to struggle around this 1140. And interestingly enough, this is about 1 ATR from high of day. ATR is roughly $1, and you can see the stock starts to slow down at that 1 ATR move. We have a low that gets put in right at 1140. Tries to put in another new low, and we get no momentum, no follow through, and it rebids. Tries to put in another new low, failed follow through to the downside, and rebids and starts to break trend here and curl back up. We get our first close above the 21 EMA, and I think that is an excellent high probability area to take profits on this opening range break. For our final example, we'll review SMCI from February 21st. SMCI was starting to overextend as traders piled in ahead of the expected filing of their delinquent 10K annual report and 10Q quarterly filings. The prior day before this opening range break trade, let's zoom in and take a look, SMCI blew off and closed near lows after a steep down move on volume. This gives me confidence that the backside is now potentially in, and I should be looking for short setups. In addition, we get some interesting clues in the pre-market that the stock could be weak today. As pre-market opens at 4 a.m., we see a failure into 2-day VWAP, which is right around 61. Interestingly enough, into the close the prior day, we see a push into that area and a failure. The stock cannot get above 2-day VWAP in the pre-market, And now we're opening up below the prior day's close. So this is the first time that SNCI is breaking below the prior day's close since this trend started. So we can take a look at the daily there. We have a strong up move, a consolidation, followed by a breakout, and we have not gotten a day since this up move where the stock has opened below the prior day's close, which many traders call a first red day. After an overextension to the upside, we get that first red day, but now we need a setup to play the short intraday. And here's where things get really interesting. The same exact opening range break setup played out the day before, almost identical price action. So let's take a look at that. This is the opening range break on the day of the trade. The day before that, where we had the blow off, the same exact pattern set up in the morning. We get a push higher, fails into resistance, we get the opening range break. Let's take a look at the day of the trade. We get a push higher off the open into resistance, and you can see this resistance from the pre-market. We'll mark that off as 59.50. You can see in the morning, pre-market fail, fail, fail. Off the open, very similar pattern to the prior day. We push into that pre-market high and fail. The same exact opening range break setup is playing out again, almost identical price action. When you see a stock repeating the same pattern, it just gives you a ton of confidence because it tells you that the same players are likely involved as the day before and they are executing in a similar way. Patterns repeat themselves because market participants, especially the big players, tend to follow the same behaviors, whether it's accumulating, distributing, or just pushing momentum. So when you recognize a clean orb that just worked the previous day, it's not just a good trade, it's just a high confidence trade because you already have proof that the buyers or sellers are showing up at the same spots. And if you're able to recognize that, hey, this same pattern is playing out as the prior day, you could start to get in short in here as we fail from resistance, turn and start to break below VWAP. You could get into half of a position in here to improve your price. You could say, hey, I'm getting confirmation. I'm seeing the exact same pattern play out. This should lead to an opening range break. We also have on the higher time frame, we have the blow off, we have the close on lows from the prior day, and we have the first red day, which should just give you confidence in starting the trade a little bit early. Now, I don't typically do that, but we do have more than enough proof here. We get the opening range break to the downside, and you can see we have the second highest volume bar of the day. So I'm adding through the break of the opening range low. The stop for the entire position now goes a few cents above the breakdown bar. And judging off the prior day's action, the best take profit method ended up being a 2-minute bar break. So you can see we start to bottom here. We get the first 2-minute bar that closes green. Again, this is the day before. And we get that 2-minute bar break, which leads to a really nice bounce. So knowing that, I'm going to implement the same take profit method, and I get stopped out as we break prior bar highs. And just one final bonus trade that I want to throw in, a little bit impromptu, but I think was also an excellent opening range break or big dog, was on that prior day. Have the opening range break to the downside. We reclaim VWAP. We go and retest the highs, and we end up holding VWAP really well. And this just set up for the classic SMB big dog trade. We could draw out our wedge there. See, we start to break that wedge and curl up, which results in a nice big dog / opening range break to the upside. So just a really amazing setup there as well. That wraps up our breakdown of the opening range break trade. Hopefully, you're starting to see the key patterns, higher time frame alignment, volume confirmations, and the small nuances that make all the difference. One final thought, you'll notice over time as you study these and in this video that different take profit methods work better in different situations. Some traders use trend breaks via the 9 and 21 EMAs, others prefer a 2-minute bar trailing stop, taking sales into momentum, or targeting a measured move based on ATR. At the firm, what I've noticed and what we see a lot of traders do is combine 2 to 3 methods to lock in profits effectively. If you found this helpful, drop a like and subscribe for more bar-by-bar breakdowns.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training.
That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.